I think mass adoption for crypto should not just come from US, should come from everywhere where a use case is needed. A stablecoin use case, that means using US dollar, is not required in the US, it is required in Africa and Latin America. These are the places where adoption needs to come in.
When it comes down, for example, to wallet, which become the main gateway for you to access cryptocurrencies, you can go either to centralized exchange or you can use decentralized exchange. And when you use decentralized exchange, most of them, they don't have KYCs. So how do you see really the future of privacy?
Everyone looks at US because money flows from it, and the problem for money flowing from the US is, there was a rule in the world that every time US sneezes, the world catches a cold.
This episode is a must watch. I've got on the show Vineet Budki, Managing Partner and CEO at Cypher Capital. Before we get into the interview, if you are watching but you are not yet part of our community, please take a moment now to subscribe to our YouTube channel and follow Financial Fox on social media. You will find all the links in the description. The bigger our community grows, the bigger Financial Fox gets, and the more prominent guests I can invite to add maximum value to you, wherever you are an investor, founder, or crypto enthusiast. Finally, please remember that our content is for informational purposes only, so it's not intended as financial advice, and any opinion shared by me or my guests are ours alone, and you should not act solely on the back of them. As always, do your own research, level up your skills, and be accountable for your decisions. The largest Bitcoin event is happening in Vegas next year, in May 27-29, and you can get your ticket now. I'm gonna put all the links in the description, and if you use our code, you're gonna get 10% off your ticket. So schedule your trip now, buy your ticket straight away, and join the Bitcoin community. With that being said, let's get to the interview with Vineet. Hey Vineet, how are you?
I'm doing fine. How are you, Stephanie?
Yeah, I'm fine. It was really good to meet you in Dubai last week.
Yeah, Dubai is happening. Actually, this is the month for crypto in Dubai. Every day, nearly every 2 days, there's a big conference happening around there. So great, you came at the right time.
And I missed all the other events, basically.
Yeah, you had Cosmoverse today, you have Blockchain Life, you had Ragdow. This all is happening over this week. And then you have the big Saudi event as well in a week at FII. So yeah, you're missing the real events. And London I think it's too cold, right? Dubai is a much better, sunnier version.
Yeah, well, I think it was much hotter over there. Here it's not too bad, but anyway, I'm heading to Lugano end of the week, so maybe it's slightly better. But yeah. Anyway, listen, you are a very well-known person. You are a leader in the crypto space. But for the people that don't know you, just give us like a quick introduction of who you are, what you're doing, and especially how you got into crypto.
Okay, cool. So I'm Vineet. I run Cypher Capital, which is a $100 million fund out of Dubai. In fact, Wu Blockchain mentioned we were one of the top 5 funds that invested in the last few quarters. We've done crazy deals like Sui is an investment, Sei is an investment, Berachain is an investment. We've done Solana. So all the cool deals in the Middle East have been done by us. Interestingly, everyone says that I've been here for 10 years. I have just been here for 4 years. Launched the first fund, which was a $10 million fund, did really well. We had some cool deals in 2021 that we entered, and that's how the idea of Cypher Capital came in. It was a single LP fund at 10 million, and then the same guy gave $100 million to invest. And that's how Cypher Capital came into place, and that's how I came into place. Randomly invested $5,000 on August 2020, and have built up this whole wealth as well as reputation in the space in the last 4 years from that $5,000.
Before we dive into today's interview, I'd like to introduce you to our partner, Hive Digital Technologies, a publicly listed company building the next generation data center infrastructure with 100% renewable energy. Hive was the first crypto miner to go public and the first one to have an AI strategy. With over 2,600 Bitcoin on their balance sheet and operations in Canada, Sweden, Iceland, and Paraguay, Hive is fully committed to transforming communities, rebalancing the energy grid, and delivering value to shareholders with a low dilution and cash-focused approach. If you don't know Hive, check them out at hivedigitaltechnologies.com. Well, it's so interesting because, you managed to go through the bear market and actually grow a lot as a fund. And you are also been doing some Bitcoin price prediction as well, which were quite spot on. So, first of all, how did you manage to kind of like grow during this market that hasn't been, all on the way up? Actually, we are kind of like going in that direction now, but we had a few years, quite a few tough years, especially from the builder's perspective.
So I'll tell you something interesting over here. When the last cycle was going on, this was 2021, everyone was the Warren Buffett. Every kid on the road was a Warren Buffett. And he was saying, I know how to ace the market. And when the bear market will come, I will have enough capital to do real investing. But what actually happened is that everyone kept on doubling down, and when the market fell, everyone was stuck in capital. While we at Cypher Capital had taken out quite a lot of profits, booked our profits, and that's how we continued. We clearly knew that you're not going to have, when it's a bear market, that's the time to be really investing. You can't be investing when BTC is hitting $150,000 or $170,000, and that's what we did. We kept on investing. We found out great startups to invest in at great prices to go in. And that's the secret, invest when everyone is running away and sell when everyone's FOMOing in.
Yeah, I think the sell part is still lots of people are struggling with it. But so your price prediction is what, 150, 180,000?
See, again, I would say that BTC has to hit $150,000 to $180,000 mark. Soon you'll be hearing people saying that it's going to be $1 million. No, I don't think so. And again, where do the numbers come from? There's a common logic to it. 2017 cycle, we had a 600 million market cap. We landed up at 3 trillion, which is a 3.6 or something like that of the last cycle. Now, if you look at the market cap last cycle, which is 3 trillion, it's not going to be under that. If crypto market cap goes under 3 trillion, it's not a growing market. It has to be above it. Now, when people do some numbers, they'll figure out that this cycle's market cap is going to be somewhere from 5 to 8 trillion. It has to lie between that number. It cannot be under 3 trillion for sure. Better we go and sell pizzas then. Now, when you're looking at 5 trillion market cap with 50% BTC dominance, you're looking at a 2.5 trillion. You can do your numbers and look at how I arrive at 150 to 180k numbers. This is not like this. This is a proper Excel sheet projection number.
Oh, fantastic. Okay, so you actually do some maths when you are making those predictions.
In the bear market, you had nothing but to analyze the markets, right? You had to look at the numbers.
You're doing your homework during the bear market.
Yeah, so interestingly, when you said, I had done, again, prediction is not my business. I do this sometimes for fun. The first tweet that I have pinned across was in 2022 August, where I predicted the prices of August, September, October, November, and December. August was it, September was it, November the direction was it. It was not the exact number. And December it was predicted at 60,000. You can go and you can have a look. So the point is, this was all coming from analysis of previous cycles and the growths across every. There is a reason why people say October is normally a positive month, and you have seen an average growth of 16 to 18% over there. So it's not random number picking from there. It is basically some data. Can it be 100% right? No, nobody can be 100% right, but at least you can be closer to, you can win 51% of the time.
So tell me, what are the factors that you think are influencing this, outlook for this Bitcoin price? Is it just about election, or is there anything that you see is going to be really a catalyst for this price rise?
Okay, so see, first, again, I'll tell you some breakups of these numbers. When you look at those predictions that I put on my Twitter, it clearly, I had clearly said that, we are going to at halving, so going to see a 40,000 plus Bitcoin. This was, I had predicted it when it was 16,000. People were thinking it's not even going to go to $25,000. Now, please understand, if you look at historic numbers, Bitcoin 15 months before, after halving, does close to 150% growth. That's, it has to go towards 70 to 80,000, and it crosses the all-time high from last cycle. So technically this 70,000 that has come in March was a catalyst from ETF buying, which was all of a sudden. And markets have neither tanked after that, neither markets have maintained the momentum. They are supposed to be at 70,000 by December. Now what happens next? First, elections come in. Elections are super critical. People say, Trump will win and Bitcoin will go to moon. Unfortunately, whoever wins, markets will go up. And this is, if you look at data numbers, Trump's party has on an average given 120% growth on markets, and Harris's party has given 240% or some numbers like that. Basically, Harris's party has been much better. But that's one of the factors. The second factor is that interest rates are going to go down. Interest rates going down clearly means people will have free cash. People in US who are paying up crazy rents will start paying lesser rents. EMIs will go down, and they would have free cash flow. And understand, after an election is won, markets are appeased a lot. You give crazy promises and try to make everyone happy. So that's where I think markets will really, the assets will grow up. But the critical part is what happens after a year of this election. And I hope everyone understands that we're replicating a 1970s stagflation model, where the recession that can come in 2026 can take everyone down. So people need to do a serious amount of risk management going into 2026.
Yeah, so if you were going to be elected the next president of the United States, what would you be doing to support this industry to strive, or to support mass adoption?
I think mass adoption for crypto should not just come from US, should come from everywhere where a use case is needed. A stablecoin use case, that means using US dollar, is not required in the US. It is required in Africa and Latin America. These are the places where adoption needs to come in. Giving out 20% yields in US through Anchor is not a stable business model, unfortunately. Giving a person in Lebanon 3% yield on a stable USDT is the real use case. So for me, unfortunately, not a big fan of adoption coming out of US, because in US it's only a speculative item. People are buying ETFs because BTC is going to go up. But what can definitely be done is that governments can first make rules clear. Every US company is setting up token distribution in Switzerland, Dubai, or Cayman. What I would say is that they need to reconfigure the laws around building up crypto companies. They need to think about taxes. Paying 60% taxes or 40% taxes anywhere in any country on crypto is foolish. Please don't equate it to gambling. This is not gambling. When you invest in a startup, you are buying the startup. You're buying equity. You're basically buying part of the startup. When you're investing in crypto, you're not buying a magic coin. You are buying into the process of that company. That means you are, when you buy Binance coin, you're buying into the process of trading. So for adoption, they need to look at it as an asset class. They need to look at it as a startup, and they need to support it as they would have done any startup, would support any startup in fact. So that's what really needs to happen. Be more clear on what is happening.
It's very interesting, the angle that you said about let's look, beyond the US, where everybody's focusing on, but actually the real adoption is coming from emerging market where there are strong use cases.
See, everyone looks at US because money flows from it, and the problem for money flowing from the US is, there was a rule in the world that every time, US sneezes, the world catches a cold. You don't want such a situation to happen in here. You want adoption to come out from Latin America, Africa, and you don't want speculators in, there's this whole case where Eduardo Sarin ended up going to New York to raise capital while Zuckerberg went to San Francisco to build a company. So you want to land where you are going to build companies, and not where you are just going to gather capital and build a $100 billion valuation company. So I think we need to focus outside US. Money is good. I'm not saying money is bad. The ETF money is helping broad adoption and stuff like that. But we need to focus. And the world is such a big place. It's not just, US is not the end of it.
Yeah. So listen, let's talk a bit about Cypher Capital, because you told us the journey, and the main idea is really, for, if I'm understanding correctly, is like investing in the future. So how do you define the future?
So again, I define the future as something that is Web3. Web3 is not a magic term. It's just that Web1 people could build websites. That's it. Web2 people could read and interact with websites, and Web3 people can interact as well as own assets and earn from it. When you are playing a game on Fortnite today, the assets are owned by the guy who created Fortnite, but tomorrow they will be owned by people, because people are the commodity. My attention is what makes money and not the game. So I think the future is Web3, where a lot of transactions will be run on supply and demand. Third parties will not might not exist. Now, why do I need to go to a bank to decide how I should use my money? In a decentralized way, it can be done by DeFi platforms. So I see the future to be more decentralized, more cross-border, and evolution of Web 2 is into Web 3. It's again, user numbers right now are pretty low. When there are only 500 million wallets according to crypto.com. It's not even 5% of the world population, and 90% of them are speculating right now. Nobody has used no one has lent or borrowed on this thing. They're just speculating, looking at Bitcoin prices. So I think the future is all about embracing Web3 and creating value. That's how I see crypto evolving it, and that's where Cypher Capital also comes into place. We as investors in Web3 look at building up the Sequoia, the SoftBank of Web3 in the next 10 years. An entity that's not just a venture capital firm, but an entity that holds considerable sway in the blockchain space by being part of startups that end up changing the whole world.
So if we look at some sectors, which one are you most excited about? You mentioned DeFi. I met you at your event in Dubai where we were discussing the gaming, but we also talk about real world assets. So tell us about the trend that you see kind of like leading this Web3 evolution.
Okay, so I'll tell you something interesting. In the last 2 years, we have heard a lot of layer ones. You've heard about Sui, you have heard about Aptos. These are basically the layer ones that are building the infrastructure for the future. These can be layer ones, these can be wallets, and number of things. But I think a lot of infrastructure has been built and it will keep on evolving. Then the next step to it is getting consumers on board. As I said, we only have some 500 million odd wallets. One person has hundreds of wallets, but if I assume just one person is one wallet, it's less than 5%. So now how do we get users on board? How do we make Web3 equal to Web2? It is through certain segments. One segment is gaming. Gaming is the biggest draw in the world. People play games. Unfortunately, in Web3, everyone plays game to earn tokens. But in the Web2 world, people play game because they like the game. So the evolution of getting great games where people come to play these games is important. One of the games that's really making waves is Off the Grid, done by Gunzilla. It was the top 3 streamed game on YouTube just a few days back. So getting quality games, getting quality IP. I've seen people like Nyan Heroes. I've seen people like My Pet Hooligan building these bunnies and building these cats, which will actually be IP. IP is that character. So games is one of them. RWA is another one. When I say RWA, today when you want to buy a house, you have to land up at a land department and do a lot of paperwork. Imagine the title deed of your house going into blockchain and people are buying things on the chain. You don't need a land department in there. So real world assets come into place. In fact, one of the cool things I had heard from one startup was making US treasuries into on-chain. Basically, people could buy US treasuries on-chain and someone would have custody to it. Now imagine startups raise $10 million. What do they do with that $10 million? They don't want to put in a risky asset. They want a 5% stable yield. They buy these on-chain US treasuries. So, things like that, real world assets would come into play. Stable coins will become big, In the end, people in Argentina have seen 95% depreciation of the Argentinian peso. That means my 100 peso is worth 5 peso right now. So what do I prefer? I prefer a USDT. I prefer a USDC. Same thing in Zimbabwe. So stable coins is a really huge use case. I think someday they will be bigger than all the tokens, whether it is USDT or DAI or whatever. So I think these 3-4 use cases are something that will really get a lot of users on board. DeFi, can I put it under real world assets or can I put it as banking? Definite need case. I want to buy a house. I have $1 million of BTC. Bank is not giving me loan on it. Bank doesn't even agree to this asset as my asset. I go on DeFi, put it up, get a 75% loan on Aave or Compound, and voila, I have money in my bank account to do whatever I want. So I think these 4 or 5 places where people see real use cases and real dApps, the consumer facing dApps is where adoption will come from.
Yeah, and I think the stablecoin definitely are playing a very important role right now. You just mentioned one of the main utilities, which is if you are talking about loans and stuff, you can always deposit your BTC, get USDT or USDC, and then get a house, which is something really game changing.
So when it comes to stablecoin, interestingly, I was on a panel with VARA, which is the Dubai's regulatory authority. It was organized by VARA. Interestingly, stablecoins have 2 purposes. One stablecoin is someone in Zimbabwe whose currency is going down 2000% every day. For him a stable coin is something like a US dollar, something that reflects US dollar, But for someone in the US, the US dollar is not a stable coin because he's depreciating on his value. He can buy a house for $1 million today, and next month he can buy a toilet with it because US dollar is depreciating against goods or services. So stable coin is important not just as a way of in developing countries where it becomes a stable way of storing value, but also in developed countries where it stores buying power. Completely understand that stable coin has different variations according to geography. So, when you look at this, Nouriel Roubani had announced about a coin known as Atlas coin, which was basically a stable coin for the developed countries. And then you have the USDTs and the DCs and Bitcoin stable coins. So, definite use case, just that adoption needs to be there.
What do you think about the coexistence of stablecoin and CBDCs?
Personally, not a big fan of CBDC. CBDC for me is basically the government not printing any more money, saving 30 cents on a dollar for printing the thing. And the biggest problem that CBDCs, people think CBDCs is crypto or is digital assets. It is not. See, in the past, people who would save on taxes or do anything funny would store the money in their bed and, they would use it. But with digital assets, you can be switched off in a day. Every government agency knows what is your wealth, and suppose you get at the wrong side, you are switched off. In fact, there was a movie known as Enemy of State by Will Smith long time back, where he says people are going to monitor the masses, but who's going to monitor the person who's monitoring the masses? So what is CBDCs become pretty risky, because you can be switched off in a day, even if you might not have done anything wrong. So CBDCs, in my opinion, is a good way to transact, but technically it doesn't mean what Bitcoin promotes. Bitcoin promotes you own your own wealth and you decide how to use your wealth.
Yeah, they are not really cryptocurrencies. I think, maybe they can be used behind the scenes from financial institution to streamline some kind of like transfer, but it shouldn't be brought into the discussion about crypto 100%. So listen, tell me a bit about the aspect of privacy and wallets, for example, and because I think there are some really important aspects that needs to be discussed. I mean, when it comes down, for example, to wallet, which become the main gateway for you to access cryptocurrencies, you can go either to centralized exchange or you can use decentralized exchange. And when you use decentralized exchange, most of them, they don't have KYCs. So how do you see really the future of privacy in crypto?
See, again, privacy is a very dodgy sort of a subject to talk about because, everyone in crypto wants that no one gets access to his data. I don't want anybody to know what does my wallet control. But then there's the second part of it is that governments also need to know what you have because, you can be indulging in certain things which are against norms of the society. So, there's always this whole fight between people who want privacy and people who, governments who want to control privacy. For example, when we look at the Telegram craze, Telegram is a product that gives you privacy. Now, when Pavel was taken over in France, you cannot do much about it. It's not that I can give privacy for a certain thing and rest I can't give. It's either complete privacy or no privacy at all. So this one's a very confusing topic to talk about because though every individual wants privacy, governments cannot give out complete privacy controls because then they have no access to how to monitor the society and how to manage the society. So for me it's a space to be thought about, but is there a complete solution? No. In fact, I remember there was a network that approached us for investment which was building a social network, the social network which will be completely private, which means no one can track your conversations. But imagine looks like a good idea for you and me who don't want anyone to see our interaction. It's a great idea, but imagine the bad elements of the society. How bad can it end up becoming for them? Because they can go unabated and they can do anything in the world. So it's a plus and a minus scenario, which I don't have an answer.
Yeah, it's very interesting because then it impacts, our data as, the assets that we own as well. And then, it kind of tied into the real world assets, the tokenization of, identity as well, which is also a very interesting topic. topics. How do you think governments can balance this decentralization and this individual empowerment and individual ownership with control? Is there like a balance that can be found, or maybe a transition that the governments or these institutions that they think about, looking after people and society, but at the same time they have to evolve themselves as well, because that's the path that we need to go through to have real world assets or tokenization of our economy. We need to go through that path, otherwise regulation will always be there to kind of like create problems.
See, I think for governments, the first thing is, when you're saying how do they build this up, much before that is they need to first get themselves educated. Unfortunately, in a lot of countries, it's run by 70 and 80-year-old people who have no clue about crypto. Like I don't want to name countries which I talk to consuls and people from different countries, and they still think that Bitcoin is used for money laundering and drugs.
My dad said that the first time that I told him I was in the space. He said, "Oh, you're laundering money."
So this is what people have to understand. This was something I was asked 4 years back when Iran had shifted its balance of payments to Bitcoin. Two consuls from the US came and asked me. They said, "Oh, but this is all, Bitcoin is how this." Unfortunately, everything has a good case and a bad case. The amount of benefit this gets to Africa and Latin America is 95%, and the bad elements are 5%, So you cannot generalize it up. But for that, first, the governments, the people have to educate themselves. First of all, they have to understand this is also not gambling, Why do world governments tax it at 40-50%? Because that is how gambling is taxed around the world. This is not gambling. This is investing in a company that is going to change the way people transact in the future. Ethereum is not a magic coin. Ethereum is a smart contract platform. And when you are buying an Ethereum token, you are buying part of the process. The process is to make a smart contract and transact on it. You're buying that. So first, governments need to learn that. Before that, they cannot regulate it. Before that, they cannot make world empowerment. They cannot do anything. So I think first let them educate themselves, understand the real use cases, and then build along it.
So you have been working extensively in Asia and in the Middle East. What do you think give this region a competitive advantage over the US or Europe when it comes, for example, to crypto regulation and innovation, and also attracting investment?
So I think first let me talk from the UAE perspective. I personally learned my crypto in Singapore. I would go to these hostels where people, I remember Republic and 10x from 2017 used to build in these zones. I used to go to this hostel known as Tribe Theory, where a lot of crypto people used to stay. But interestingly, the UAE became interesting when post-COVID, they opened up their doors for people from blockchain, people who were building on crypto. And it's really seen enormous wealth, enormous content, enormous products coming into this region. They have understood this. They have built up regulations around it. Today you can, in DMCC, you can do a prop trading license, you can do a software development license, you can do it in ADGM, you can do it in Russell Khema. So I think it has seen great benefit in it. In the whole region, Qatar has just following in, Saudis still evaluating it up. In India, it's been pretty draconian. The interesting part is India has a lot of developers, Web2 developers. We were the developer station of the whole world. So the day it opens up, we can also lead Web3. Similar with China, they're blocking it up. They're blocking innovation. But I think the manpower of intelligent people that they're having to code this up, it will actually end up, whenever it opens up, will be add value. But UAE has definitely hands down taken the lead and built tremendously on it. And so it acts as a place where companies set up, and it acts as a gateway to Africa and Asia.
Yeah. So another thing that I wanted to ask you that we haven't discussed yet is about NFTs. NFTs has been quite controversial because we seen a massive hype in 2021, and then it was kind of all went down. And what I would like to kind of understand, obviously they have revolutionized art and collectibles, but where do you see really the real future utility of NFTs?
Okay, so for me, NFTs, other than the art part, there's another key parameter here is about community. See, you're in London, right? You have the Arts Club over there. Arts Club, you need to pay $15,000 or £15,000 to become a member. Why do you become a member of Arts Club? Because when you go over there, you meet people who are qualitative, people who give you business opportunities, people who add value to your life. Would you pay $15,000 to go to a London coffee shop and sit there and waste time? No, you pay that $15,000 to go to a club. Similarly in Hong Kong, similarly in Singapore, similarly in Dubai, there are these clubs where you end up paying anywhere from $15,000 to $100,000 as a membership thing. Now, when it comes to NFTs, these are exactly similar membership clubs. When you talk about CryptoPunks, people who are buying CryptoPunks worth $150,000 or $200,000 are definitely not kids walking on the road. They are kids who made money, but still there are a lot of people who really have wealth, have business opportunities. So I see NFTs more as a club. Now, different clubs have different meanings. What you call CryptoPunks are clubs which are wealthy people, have business opportunities. Apes were people who wanted fun, who were younger people, who probably made a lot of money in crypto. They were all about parties. Now that same group of people has landed up in Pudgy Penguins. If you go to Pudgy Penguins, you will get the vibe of it. So it's just clubs. Some clubs where people look for opportunities, some clubs where people look for fun, some clubs where people look for a number of things. And that's how I see it. Art. Yes, there is a great art aspect to it. Why I think NFTs will make a comeback also is, I had a lot of token investments. I had close to 200 plus investments in the last cycle personally. When you sell a token, emotional connect, it's a token. You sell one Ethereum or second Ethereum, it's the same thing. When you buy your NFT, there's a certain aspect that you look at that. I would like, if you look at my mutant ape, this is a top 100 mutant ape. It's a 68, number 68 mutant ape. There's a level of prestige, there's a level of my reflection that I see in it. And every time you sell, you tend to buy it out. So for me, this is not just a token. This is a thing that represents you. And if you sell, you would go and buy it back. So I think it has value. It has value in terms of the community effect and prestige effect, and it will make a comeback, no matter what people say.
Yeah, it's interesting because when you kind of like build a club, which is true, you also need to put a lot of effort to grow the community, to keep the community, to give things to your community. And I think what we have seen, a lots of NFT projects just raising money and then disappearing or not doing anything. And I think that's where you kind of need the lifeblood in the community to keep thriving, to have a solid club. Exactly like the arts club. It's not like they just get members, then they create all this type of event to get them engaging. And I think probably the Bored Ape and a few others, they actually managed to do that, but not many.
In the end, value has to be created. In terms of normal art, you create value in terms of engagement. Like this is a DALI I have. Now in this case, DALI has built a brand of himself. He's a huge painter. So either you make art where you become super popular. Like you have the guy who did the modern art in New York. Either you buy his art because you know that he's gonna become a good artist, or you add value by making a community that adds value to the other. Whether it's young kids who want to have fun and have party, you make a Bored Ape or you make a Pudgy Penguin. Or if it is guys who want to end up meeting these superstars, then you make a CryptoPunk. So that utility definitely has to come as you go along.
And something quite interesting, I think we touched that kind of aspect in the panel discussion with Yat Danimoka, was the concept of decentralized IP, which the NFT could actually be used for that. Because I think that's also what Pudgy Penguin, for example, is doing. They enable the NFT holders to become creator of their own, kind of like it's not their own brand, but is a brand behind the brand, you know what I mean? And they get paid royalties. So that's also a very interesting utility aspect of NFT, for example.
Yeah, I think, that was also done across some other ones. You had these Tiffany, we call punks that came up. Yes, I would say getting wealth is just a part of the whole thing. Because my NFT was used in a toy and I make $100 from it, can be a use case. But there's much more than that. We should not equate everything to how much dollars you make out of it. Sometimes you have to equate from the community part. I'll give you an example. When you talk about Reddit or when you talk about Waze is like Google Maps. It is run by the community. People don't get money from it. People get a status on it. When you talk about Reddit, you become popular. So it's not always about money. It's about your position in that society or in that group that adds value to you. So we have to look at it from those perspectives as well.
Yeah, your in a way is also kind of your reputation, your status, and that all comes down to identity, which is another big, kind of like a big topic that actually has not not yet been exploited, I would say, because it's a very sensitive topic as well. But there is a lot that has been done recently with soul-bound tokens and probably much more that you see with the project coming to you as well.
In fact, what Yat mentioned during that interview was interesting. We had this discussion. A lot of people don't understand Mocha as such, but was something very interesting. He said, see, it's not about just your identity on the internet, but also understanding what you do in the internet. Are you the guy who runs to 20 different chains to get a $10 airdrop? If you are that guy who spends his whole day making $100 airdrops, unfortunately, you are not the right fit. And Mochaverse gives clarity on what this person is. And are you that guy who ends up buying $10,000 worth of tokens and dumping it at the first time of listing? And unfortunately,
Yeah.
you are not the right guy. But are you that guy who actually bought Ethereum when it came during the ICO and has held on to 98% of the reserves? This is the type of people. So he's not just talking about your identity by Mocha, but also trying to say that Mocha will find out how have you acted, and it gives people much more value, projects much more value in identifying you. If you are a gamer, how well have you played the games just for airdrops, or have you actually played the games because you like it? Then it's better to get 100 such gamers and build a game rather than getting 10,000 people who want a $10 airdrop just to download a game.
That's a bit sad. Anyway, listen, last question, which I really wanted to get to, and I think I did mention that when we met. I mean, Cypher Capital has been investing with a very interesting approach, so taking tokens, and tokens are very volatile. So my question is actually, how do you manage and mitigate the risk of getting tokens instead of equity, at the same time ensuring the long-term liquidity and growth of project?
Okay, so before I answer that, I have a question. So I have a bad experience with equity. That's why I prefer tokens. But I'll ask you a question to answer this. Would you prefer to have $100 of equity that you can never sell, or would you like to have the same? Tokens which have depreciated now. At least you can sell it and get $10 back, right? That is the liquidity.
Exactly.
Unfortunately, see, the reason is I used to run startups. My last startup was valued at $8 million. COVID came, it crashed the whole thing. There was no way to sell secondary equity, and there was no liquidity. So for me, I only believe in liquidity. Now, when you say there is no liquidity, it's not really true. When you look at Binance and you go to the top coins that are there, they are trading over $200 million in daily volume. So it's not that there is no liquidity. Yes, you are going to invest in a coin which is 10,000 market cap. Of course, there is no liquidity. You are unfortunately foolish enough to go and buy those tokens. So what I'm trying to say is the reason for it is it gives you a bit more liquidity. But again, it's all about selecting the right coins. A lot of people buy tokens without even knowing what they do. If you want to do a survey, ask people, 20 people you meet tomorrow, what does Ethereum do? I guarantee you that 80% don't even know what Ethereum does. They don't know what a smart contract platform is. They don't know what WorldCoin does. So the point is, first is all about finding out what is the utility and who is the team behind it. I would love to invest in a guy who's come out of college because Zuckerberg dropped out of college and made Facebook. But 99% of the people who drop out of a great college don't end up making Facebook. So I need to know who the team is. The team has great experience in building startups, has done great stuff in TradFi and trying to build something in DeFi. Great, find great teams, find great ideas and invest in them. And don't invest in people who are raising $500,000 and going and launching a token. Invest in people who are raising 10, 15, $20 million to build up a great team and build up a great project. Definitely liquidity, valuation and everything will come later.
Yeah, it's all about people. Listen, when we were in Dubai, you mentioned, I think it was 3 or 4 things for you are really important when you are assessing a project and the future that project can have. Would you mind to expand that and share that with us again?
So, the key part of evaluating any project in the world is the founders. Founders in terms of capability, in terms of capacity, and in terms of approach. What it basically means is you are a founder, you have not even driven a car and you want to build a rocket. Unfortunately, it doesn't happen. So you have to have the capability to build something. At least you have 5 years of experience in doing something and you want to change. You found a problem. Not that you woke up from the dream and you are I don't shouldn't be saying that you are an influencer and now you want to build the next big DeFi thing. Unfortunately, capability doesn't exist. You don't understand how interest rates work. You don't understand. So capability. Second is capacity. Building a startup is not a kid's job. It takes 24 hours of a time, 7 days a week. That means you have to leave your family. That means you have to leave your partying and focus on building a product. So do you have the capacity to do something like this for 5 years with continuous rejections, continuous failures? So it's about capacity. It's about approach. You want to end up raising $100 million, but you know nobody in the industry, and you're sending mails on LinkedIn and Twitter. Is this how it works? Always about founders, always about use cases. Planting trees in Africa has no blockchain use case.
Yeah.
But building a DeFi platform that will see to it that people in Zimbabwe will lend and borrow through public markets at the same interest rate has use case. So how does blockchain add value to the whole product that you are building? So the use case, token use case. I talk about tokens having need and want case. What it means is you need water and food to survive. You don't get them, you die. So Ethereum you need no matter what, because 80% of smart contracts are there. You need to use it for transaction. And there's a want case. You want a Ferrari. Ferrari doesn't come, you don't die. Similarly, people build tokens where when you buy my token on my platform, you will get 20% discount to buy this t-shirt. I can buy it on Amazon.com without going to your platform. It's a want. I don't need that token. So people have to understand these 3-4 parameters before building great companies, and that's how I evaluate them and invest in them.
Yeah, fantastic. And then I remember you also said, first of all, get a lot of users and then come back to me. So like the scalability of the business and the adoption as well being very important. And I think that thing really stick with me. You are a founder, just go to Africa and get people to endorse your project and sign up for what you're doing and then come back to me. And I think this is such a great advice to many founders. They are building products.
So look at majority of the Web3 founders. Where do you find them? Do you find them in New York? You find them in Singapore? You will find them in Hong Kong? You find them in Dubai? Do you find anyone in Africa? Do you find anyone in Latin America? No. But where is the use case there? So when you look at a product like Jamba, they're building phones for Africa and they're based in Africa. So you understand that these guys are serious about building whatever they're building, Unfortunately, everyone, and this is what you'll see in the next 1 year because the crypto bull market is ahead, suddenly everyone will come up with a new idea and will be raising in the next 1 year. So that's not how it works, To build real companies, you have to do real work, and that has to be done in the markets where they are. So it's going to be fun. Next 1 year is going to be too much fun.
Vineet, thank you so much for coming on the show. It was great to have you on.
Perfect. Thank you. Really appreciate calling you, and I had a great talk with you.